This is Barry Zalma, Zalma on Insurance. Today it's time to talk about the modern market at Lloyd's in London, which is different from the market that started in Edward Lloyd's coffee shop about 300 years ago. The market at Lloyd's is a place where groups of individuals and corporations can transact the business of insurance. After hundreds of years, it has developed a strict method of placing insurance. It has been described as follows. The Corporation of Lloyd's never sells insurance itself and is not at risk on the insurance sold on the floor at the Lloyd's building at 1 Lime Street in London. Rather, the underwriter members subscribe to cover all or part of a proposed placement of insurance at their own election. Numbers of individual underwriters, many in England, but others scattered throughout the world, have joined together to form syndicates to sell and enter into the business of insurance. Syndicates may have anywhere from 2 or 3 to hundreds of members. The individual members are known as the names on the syndicate. These syndicates are the entities which subscribe on behalf of their members to cover risks and percentage parts of risks. The actual potential liability of a given name depends upon his or her percentage share of the syndicate of which he or she is a member, as well as the percentage of the risk to which his syndicate subscribed. Lloyd's is now the market of last resort. Unlike other insurers, Lloyd's offers sufficient affordable insurance against almost any risk. The Lloyd's system is so successful that it has been imitated worldwide. Exchanges or markets have been opened in Illinois, New York, and Florida, none of which has even approached the success of Lloyd's. Lloyd's also reinsures, that is, it insures the insurance issued by other insurers, and reinsures almost every insurer in business worldwide. Most names or investors do not actively participate in the insurance market on a day-to-day basis. Rather, the business of insuring risk at Lloyd's is carried on by groups of names called syndicates in order to increase the efficiency of underwriting risks. Groups of names will, for a given operating year, form a syndicate which will in turn subscribe to policies on behalf of all names in the syndicate. A typical Lloyd's policy has multiple syndicates which collectively are responsible for 100% of the coverage provided by a policy. The syndicates themselves have been said to have no independent legal identity. Thus, a syndicate is a creature of administrative convenience through which individual investors can subscribe to a Lloyd's policy. A syndicate bears no liability for the risk on the Lloyd's policy. Rather, all liability is borne by the individual names who belong to the various syndicates, whether they are human beings or corporations, partnerships, or other types of entities. Syndicates that subscribe to a policy, their members are obligated to pay all claims. The Lloyd's Marketplace describes its market as follows. Quote, unlike many other insurance brands, Lloyd's is not a company. It's a market where our members join together as syndicates to insure risks. Much of Lloyd's business works by subscription, where more than one syndicate takes a share of the same risk. Business is conducted face-to-face between brokers and underwriters in the underwriting room. When we talk of Lloyd's, we're really referring to two distinct parts: the market, which is made up of many independent businesses, and the corporation of Lloyd's, which is there, broadly speaking, to oversee that market. These parts are distinct, but far from independent. Both work closely to maintain high standards of performance across the market. Lloyd's includes a number of different types of members who are involved in the business of insurance at Lloyd's. Individual members are names, high net worth individuals whose exposure to the insurance risk they underwrite is unlimited. That is, they pledge every pound, pence, or dollar that they own to pay claims. And corporate members formed exclusively to underwrite insurance at Lloyd's, who pledge all of the corporate assets to pay claims. Currently, underwriting is also conducted by partnerships and syndicates that include both individual and corporate names. In addition, underwriting at Lloyd's includes Scottish limited partnerships, which are limited partnerships established in Scotland, and limited liability partnerships, a new category of corporate member at Lloyd's in effect since January of 2007. An LLP is a type of corporate entity formed by being incorporated under the Limited Liability Partnership Act of 2000. According to the Lloyd's website, www.lloyds.com, in early 2012, the number of active members of Lloyd's dipped slightly in 2009. Individual members were down by 15% from 907 in 2008 to 773, and corporate members were up 7% from 1,155 in 2008 to 1,238. In 2019, there are 113 active syndicates of underwriters doing business at Lloyd's. Each underwriting syndicate is made up of many individuals, corporations, partnerships, or other entities joining together to write insurance at the Lloyd's marketplace. A large majority of the remaining members of Lloyd's are not actively underwriting anymore. However, they must remain members of Lloyd's until all their liabilities have been quantified or reinsured to close the book of business. When insureds receive Lloyd's policies of insurance, what they actually obtain are commitments from each individual, corporate, limited liability, or partnership insurer, called the Underwriters, to pay claims up to their entire assets. The names are jointly and severally obligated to the insured for the percentage of the risk each has agreed to assume. The insured, if there is a dispute over a claim, need not sue each name individually because the typical Lloyd's policy contains a clause providing that any name can appear as a representative of all the names. Each name is contractually bound on an individual basis to the insured to adhere to any adverse judgment reached in a suit, notwithstanding that only one name participates in the litigation as a named party. The names pledge their entire fortune, every pound and pence, penny or dollar of their assets to pay claims. Some names have lost everything paying claims, while most have earned substantial profits. In the late 1990s, Lloyd's changed its rules and allowed corporations with the limited liability provided by the corporate form to become insuring names. Now the investors at Lloyd's only risk the assets of the corporation rather than their entire personal fortune. Insurers in the U.S. do not have the tradition of unlimited liability and professional insurance practitioners that exist in London at Lloyd's. Nonetheless, case law from the UK furnishes some useful precedents for the American industry and for Americans insured at Lloyd's. Syndicates in the Lloyd's market have no independent legal identities, but are merely creatures of administrative convenience who operate as an aggregation of individual members with individual contracts and obligations running to the insured. Based on that description, Lloyd's syndicates seem to constitute a basic unincorporated association. Because of the great expansion of worldwide trade and the extent to which business firms make investments outside their home country, the market for insurance on a worldwide scale expanded rapidly in the 20th century. This development required a worldwide network of offices to provide brokerage services, underwriting assistance, claim service, and so forth. The majority of the world's insurance businesses are concentrated in Europe and North America. These companies must service a large part of the insurance needs of the rest of the world. In 1990, the 10 leading insurance markets in the world, in terms of the percentage of total premiums were collected, were the United States, Japan, the United Kingdom, Germany, France, the Soviet Union, Canada, Italy, South Korea, and Oceania. All of these people write insurance. Some try to emulate the Lloyd's market, some do not. But it is important to understand that the Lloyd's market, with its total individual liability and promise to spend every asset the members of the syndicates writing insurance have, is unique. And that is why it has been mostly successful since it first started more than 300 years ago in the Lloyd's coffee shop, where insurance policies were written on a blackboard, and those taking the risk would sign their name and the percentage of the risk they were taking at the bottom of the agreement, and that's why they're called underwriters. This video was adapted from my book, Zalma on Insurance Claims, Part 101, 3rd edition, which is available as both a Kindle book and a paperback from Amazon.com. If you found this video to be interesting or useful, please pass it on to your colleagues. It's free. And please also subscribe to my YouTube channel, my Rumble channel, and click on the like or the Rumble button as you do, and subscribe to my blog post and to my Substack and now to my locals, where for a very small fee you will be able to obtain much more interesting and detailed insurance information. Thank you for your attention.